set up in 2005 to house all the credit businesses of the Edelweiss group. Okay. Now it's an NBFC, and it's a systemically important NBFC governed by the Reserve Bank of India, and its portfolio has grown at a rate of 49% over the last 3 years. Now it benefits from the strong parentage of Edelweiss, and which include risk and governance practices. So consequently, the NPAs as of September 30th were 0.27%. The company is well capitalized and has a capital adequacy ratio of about 21% as of September 30th once again, and it's a profitable and growing business. The profit for the first half of this financial year was 102 crores. This is an overview of the various products that the business has, which include corporate and SME loans, loans against property, loans against marketable securities, real estate, and ESOP financing. The loan book has grown quite significantly. At the end of financial year 09, it was 560 crores, and that number is now 4,839 crores as on September 30th. Another key aspect of the financials is that the leverage ratio, which is 3.38 times, which is reasonably low compared to the peer group for this company. The pie chart again shows the various businesses. About 49% is corporate finance, 16% is loan against property, 13% is loan against security, 10% is real estate finance. So all these businesses are secured. 92% of the businesses are secured, and most have a collateral cover of 2 to 2.5 times, making the book absolutely secure. I'll just focus on the strengths and strategies of ECL Finance. It benefits from the strong brand equity of the Edelweiss Group, and consequently it's able to raise funds at a low interest rate. It has a stable and professional senior management. So the strategies include diversifying. It started with the wholesale business, diversified into retail, diversified into various product groups, and growth is not pursued at the expense of risk. So growth and risk go together, and consequently it endeavors to enhance its credit rating. So obviously you take well thought through risk, so you have good NPAs, so your credit rating increases, so you have access to a lower cost of funds, and it's a virtuous cycle that is targeted. Now the board of directors of the company include Rasesh Shah, who is the founder and chairman of the Edelweiss Group. Ravi Bubna is the CEO of ECL Finance. Himanshu Kaji is the chief operating officer of the Edelweiss Group. Rujan Panjwani is an executive director on the board of Edelweiss and a non-executive director for ECL Finance. And finally, we have Mr. P.N. Venkatachalam, who retired as the managing director of the State Bank of India, and he's worked in the State Bank of India for about 40 years. The company also follows strong business processes to mitigate risk. It has an operating system called FinOne, which houses all its loans, and this technology is used for origination as well as for account maintenance. There are various committees which appraise risk, some of which that Deepak alluded to. So the origination as well as the underwriting and approving teams are different. So this independence ensures a superior quality of risk and portfolio. So all of this has ensured a high quality of loan book. You'll see that the gross NPAs hover between 30 and 50 basis points, and the net NPAs 16 basis points as of April and 27 basis points as of September. 92% of the book is secured, and we have a provision coverage of 70% at this point in time. We'll just focus on the financials of ECL Finance. The total income, which was in the 400 crore mark, this is the top line for FY11 and 12, increased to 650 crores in FY13. And for the first half of FY14, we've already done 427 crores. So obviously this year has seen a significant growth in income. Consequently, the profit after tax, which was 121 crores for FY13, and that's the chart on the bottom left corner, we've already done 102 crores in the first half of the year, and we have another 6 months to go.